For this video, I want to go over with you some circumstances where you might want to or might need to amend your federal tax return. Okay, so this is not an all-inclusive list that I'm going to go through, just some of the most common reasons I see that you might need to amend your return. So starting with 1040s, right? So 1040 is probably the most commonly amended return, but you can amend almost any income tax return. So if you have an 1120 corporate tax return, you can amend that if there's something wrong. 1120S for S corps, 1065s for partnerships, 1041s for trusts, right? All of these returns have avenues to file amendments if you need to. So let's talk about some examples where you might be required to amend your return. Well, the first reason is if you fail to report income. So under Section 61 of the tax code, gross income for a taxpayer includes all their income from whatever source derived, okay? So whatever you have in gross income has to be reported, even in cases where it might be non-taxable. So for example, if you receive tax-exempt interest from municipal bonds or municipal bond ETFs, that interest income generally isn't taxable to you at a federal level because it's a state product, right? So the federal government can't tax that type of interest. But nevertheless, you still report on your return, right? If you look on page 1 of your 1040, you have there's a box for tax-exempt interest where you're supposed to report the gross amount of tax-exempt interest, even though it's not going to be subject to tax. So certainly if you have income that is going to be taxable and you forgot to report it, then you're going to need to file an amended return. So for example, if you're a sole proprietor and you have a Schedule C attached to your 1040, and let's say you only reported 50,000 in gross sales receipts, but you actually did 75K, well, you're going to have to amend your 1040, amend that Schedule C, include the additional earnings, right? So your net income from self-employment goes up, so now you owe more in federal income tax and you owe more in self-employment taxes. Okay, so that's one example. The other one is if you fail to include a required form or schedule. Okay, so if you file your 1040 and then you later find out that, oh, I should have included this form or schedule to report an investment or something like that, then you might need to amend your return. So this example we have in front of us, Form 8621 is used to disclose a U.S. person's investment in a passive foreign investment company, so a PFIC. Those investments are disclosed on an 8621, and they're included with your return. Now, in some cases, if the PFIC is operating at a loss, then you might not have any income inclusion. So again, this is one of these areas where even if there's no taxable income that's going to be included or change, you might still have to amend to report certain types of investments, and a PFIC investment is one of those. Okay, so now let's talk about where you might choose to amend a return, but not necessarily required to. So the first one is changing in filing status. So one of the biggest things I see is individuals that qualify as head of household filing as single. So if you're a single parent and you have a dependent child living with you and you provide for all that child support, and you're not married, you might qualify for head of household status, which is better for you because head of household status have different tax rates and they have a higher standard deduction. So if you switch from single to head of household on an amended return, you're going to add a few $1,000s in standard deduction to your return, and so you're going to get a refund. You're going to get some money back. Okay, so that's a really big one. The other one is you just flat out forgot to include certain deductions or credits, right? So if you claimed a standard deduction on Schedule A, and then you later realize that, oh wait, after I add up my mortgage interest, my property taxes, my state taxes, my charitable contributions, all this kind of stuff, now I'm over the standard deduction. Well, now I know I should have been filing as an itemized taxpayer and not taking the standard deduction. So if you amend your return to include a Schedule A and all of your itemized deductions, that'll lower your taxable income, right? So your AGI will stay the same, but your itemized deductions will decrease your taxable income. Overall, you're going to pay less tax. You'll get a tax refund. And the last one I see very common is canceled debt income. So cancellation of debt income is generally taxable income. It's gross income. So if you have a credit card, let's say you have $10,000 in credit card debt, and you don't go to bankruptcy court, you just work out a deal with the credit card company where you pay them $2,000 and then they cancel the remaining $8,000. Well, the $8,000 that was canceled is included in your gross income. It's reported to you on a 1099-C, and then ultimately that 1099-C is reported on your 1040, and you include it in income and pay taxes on it. Now, one such exclusion is an insolvency exception, right? So if you are insolvent, meaning your assets are less than your liabilities, right? So you have more debt than you have assets. So your net worth is negative, effectively. If your net worth is negative and you're insolvent, you might be able to exclude some of that cancellation of debt income from your gross income. So a lot of taxpayers prepare their 1040, they input that 1099-C, it's included in their income, they pay tax on it, but when they go back and look at that tax year, they determine, well, actually, when that debt was canceled, I was insolvent, so I can exclude that from income. You can file a 1040-X to amend your return, prepare and include a 982. And if the IRS approves the amendments, then it'll lower your overall income and you might get some money back. So a lot of different reasons why you want to amend your return, why maybe not. Let's talk about why, some circumstances where maybe you might just want to let it pass. Well, first, let's talk about statute of limitations. So if you want to amend a return and it's going to be in your favor and you'll get some money back, a refund, the IRS has a 3-year window on a statute of limitations there. So if you discover an issue from 5 years back, let's say this cancellation of debt issue that I just described, if you discover 5 years ago that you reported this 1099-C income, you were insolvent, you paid tax on it, but you didn't do the 982, you didn't do the exclusion, you're actually barred from going back and amending to lower your income because it's beyond the 3-year statute of limitations. So, not ideal. So the idea is if there are issues that are in your favor, catch them early, right, and file these amendments before the 3-year mark. Now, the other issue is, there's a kind of a disconnect here between when you need to do something and when you might just kind of want to let it go, right? So there's a lot of scenarios where maybe there is something that you should have done 6 years ago, let's say. Now, the plain letter of the law is if you made an error, you probably should be filing an amended return and fixing it. But if it's been 6 years and the IRS hasn't audited you yet, and if, let's say, the error is nominal, right, it's not a big material problem, then after a 6-year period, you might just say, look, I'm just going to leave this be, and I'm not going to want to, wake the sleeping giant by filing an amended return. These are all things where it really depends on your unique facts and circumstances. So I never encourage people to go down this path by themselves. You should always speak with a CPA or with a tax attorney that deals with these issues a lot, because you always have to consider the statute of limitations. You have to consider what kind of exposure you're creating for yourself for that given year. And then what is the ripple effect? A lot of times you amend a return and it kind of piques the IRS's interest, and then they start looking at other years too. So if we're trying to avoid those kind of problems, then maybe you might not want to amend a return. But so that covers it for this video. I hope that was helpful to everyone. Of course, if you have any questions about amended filings, please feel free to post a comment below. I try to answer as many of those as I can. And if you have a good question, a lot of times I turn it into a video. So if you have a good question, I might not answer it there, but I'll create another video that will cover the topic. And so that means everybody can get the answer to the question. So, all right, thanks again for watching, and I look forward to seeing you on the next video.